All right, ladies and gentlemen, welcome to the show. Let's start. Let's get it going.
All right. As we've been discussing for a while, that there's sort of like been uh, there's been evidence of a sector rotation recently that's gone from high value tech, okay, and then into durable goods and industrials and commodities.
Yep.
And it's interesting. You can actually, I saw some charts with this, but essentially what's happening is it's happening in fits and spurts, which is kind of interesting. I'm not sure if that's like noise injected, like from the retail side. You know what I mean? That will
hmm
chase headlines, which will cause like a fluctuation between the two. But there's a definite over, I guess, October of last year is when this sort of started.
Sure.
There's been a sector rotation from a high value tech into even when it comes to the chip makers and stuff like that, which are still technically hardware, right?
hmm
But even still, from even them into commodities and into other more, let's just say, cash flow positive, profitable, uh, real thing, tangible asset companies. Okay,
hmm
so that's going to be the overall
Theme.
paradigm of which
Right.
theme that
Yeah.
we'll be looking at,
Yeah,
and
and
there,
that I may remind everyone, for those of you who don't know, that is typical of a recessionary rotation, right? So
right.
when people are done popping bottles and leverage is petered out, people actually go into real things. Who'da thunk, right? When things are
Right.
going good and the economy's booming, then you see a lot of like investments in tech and finance and things like that. So I think that
Right.
this is a perfect example of that.
It's been a long time coming, to be honest. But also, when you think about it with respect to interest rates too,
Mhm.
the sort of interest rate environment that we've had, zero. Basically, we've had the bar set at zero for the longest time.
That's right.
When money's essentially free, bankers and people, just people of wealth are able to speculate as much as they want
Right.
without incurring any real cost,
Yeah,
right?
correct.
So they can essentially gamble because there's no cost to the gambling itself, right?
Yeah.
So, but of course, what we're looking at now is all the talk of the. I don't think the Fed is really going to raise interest rates, to be honest. But if you look at the recent CPIs and inflation's running pretty hot and heavy, even in
Yeah.
the even in like the Fed speak word of inflation, not
Right.
true inflation,
Sure.
which
Which we all
but
know
just
is
in
way higher.
right. Right. But even in their contrived indicators, that's been going up. So that means even if they want to drop interest rates, it's going to be difficult for them to do so. And if you know anything about the structure of the Fed, it's like, oh, Kevin Warsh is in, he's going to lower interest rates. Well, he can't do it on his
So
own.
I don't
It's
that's the thing that people don't understand is like the Fed is not this like dictatorship, right?
the board of
This
governors,
it's a
right?
board of governors, all of which is appointed by a bank, all of which is looking out for, their own interests and the interests of their people. So just because you have some new maverick dude in doesn't mean really anything.
Right. It's not an authoritarian
Sure.
dictatorship,
Sure, it's not like
So
he can
right.
override it.
Exactly. So, and I think the last Powell actually is still on the board of governors too,
Yes,
if
he
I'm
is.
not
He didn't like
mistaken.
retire.
So, yeah, right.
Yeah.
So, he was under he actually thought they should have raised interest rates.
He did,
So just
and he's
because
been pretty
Warsh
vocal
got
about that. And
right,
I mean, to be fair, there's an argument to be made for it. I just don't think that, like, this is a true demonstration of the flaws of the fractional reserve lending system, right? Because there are certain things,
mhm,
certain issues that you just can't interest hike away, right? And so
right,
when you put all of your faith in this system, it's kind of like that book Anti-Fragile, right? You set yourself up among these certain axioms and paradigms. You put so much weight on it, and then something comes over from over here that's like outside of those axioms, and everybody's like, "What? What do we do?" Right? And that's a
exactly,
basic thing in science and math. You got to really understand your fundamental axioms and principles and what they apply to and what they don't.
right, exactly. And that whether we like it or not, I don't think either. Honestly, I don't that we like to. I honestly think markets make too big of a deal about the Fed. To be quite honest, I don't think the Fed isn't the end all be all. It's not
Hmm.
like the Fed can really, by diktat or fiat, just like basically make economies do anything.
Hmm.
Yeah, it's just that's not how it works. So, but the reason why I'm
Well, it's
saying
about
now,
control.
right, or the illusion of control
Yeah.
is what it is. It's really, I mean, that's what governments are good at, performing a magic act.
Hmm.
We raise interest rates to do this, and anyway,
Yep.
that's another. But what I'm saying here is it's gonna start to get to the point, and for good reason, uh, that we're gonna see. I believe we're on the brink of seeing a really massive sector rotation from tech heavy into industrials, into commodities, and into other sectors for many, many, many reasons. Primarily, what we have on the screen right here. Uh, I mean, 4 states seeking $1.4 trillion penalties in social media addiction trial. Okay. And what's really damning about this, I've been following this sort of story a while. I've been the curmudgeon basically for a very long time that's saying that social media, it like has all sorts of deleterious impacts on society as a whole,
So,
uh,
yep.
not just on adults, right? But on culture, on time sinks, on depression
Well,
rates,
it
on this
like
is a
this is
well researched
measurable.
phenomenon, right?
This is
It
yeah,
has
this is
been, but right,
measurable. And in my opinion, it started when we had multiple tabs in our browsers. There was a noticeable, and again, this is verified in the literature, a noticeable drop in attention spans because all of a sudden you can multitask and flip back and forth between things, and it's gotten steadily worse ever from there, right? So you have social media instant gratification. AI has made it even worse. At least with
mm-hmm.
search engines, you kind of have to do a little bit of research and upper cognitive thinking. Like, hey, is this bullshit? Like, AI is just like, tell me the answer, tell me what to think. So there's not
Right,
even like that lag, right? There's not even that lag. We have to step back and evaluate things. So it's
yeah,
yeah, it's just been a steady decline since then.
right. And on top of that, what's really damning, I actually think it's funny because Facebook says that like there's that this them seeking this 1.4 trillion in penalties. This actually they didn't. This number wasn't magicked out of the air.
Of
This
course, it's
number
usually not. No, there's a precedent.
no, this number actually comes directly from what Facebook says the value of a teenage child is and the number of each teenage child they have on their platform. So
Wow.
this isn't even involving the adults.
Hmm.
This is just people below the age of 18. They
Hmm.
put that mark around, I believe it was $750.
A
Okay.
sanction of that size has no analog in the history of consumer protection enforcement. Well, let's set a precedent.
So let's set that right.
Yeah.
This is a new realm, right? So
Yeah. So
this
just
is
as we
that
said, yeah, 4 states are seeking that 1.4 trillion. And California, that surprises me. The fact that California is on there may
uh-huh.
suggest that there's some more insidious reason, like to usher in digital ID. If you notice, that's what happened in the UK. It ushered in digital ID under the auspices of protecting the children. Well, we all know nobody gives a fuck about protecting anyone, specifically not children. um,
In particular,
yeah, in
children.
particular, not children. So,
Now, right. But with that said, now here's part of the problem. They've tried the digital ID stuff and they've tried to roll that out in Florida too. Here's the problem. You are right, but two things can be true at the same time. The damages are real,
the damages are real for
and
sure. Yeah.
right, but at the same time, they are also trying to use it as a Trojan horse
Yeah, it's not
for
binary.
digital.
Yeah,
It's
yeah,
not
for
right.
sure.
It's not
Yeah.
binary. So, but here's the catch: if you want to argue against digital ID, you're going to have to do it from the pretense of understanding and accepting that the damages are real,
Oh yeah,
right?
for sure.
I personally, I don't, like I said last night, like I think we should just like try to come out with a law or petition. Like, I don't know. Let's we're
Just
we're done with social media. Like,
yeah, I just
let's
think when
make it
is the
illegal.
time?
Make
When
it
is the
illegal.
time when we can, as a society, get together and be like, listen, guys, we tried it, it didn't work, right?
Yeah, exactly. Right.
So,
And yeah. So with that said, this overall trend, those harms aren't going to go away. If anything, they're just going to expand with
no,
AI.
and if you
So we're
look
going to
at
see that sector rotation happen even faster and
we're
further.
seeing all
Right.
the damages done with COVID, for example, like those kids that were in their formative years during then, we're seeing that damage, right? And then on
Mm-hmm.
top of that, add like endless, limitless social media on top of that, and it's basically a
Right.
destruction of how the human mind socializes, which is extraordinarily dangerous. And I mean, we're going to be seeing those ramifications, down the line when these kids grow up.
Yeah,
Um,
absolutely.
but
Oh
here
yeah,
we
this is what I emailed you. Yeah.
yeah, yeah.
Mm-hmm.
To switch gears, this is I was waiting for this. Thank you. Christmas came early. Thank
Mm-hmm.
you, Santa Zach. Uh,
Yeah.
so basically, if you have been following the show, pretty much since the beginning, we have been really heavy on northwestern or just Western Hemisphere. Energy producers, energy infrastructure, those type of stocks. Why? Because things haven't been going so swimmingly in Hormuz, and Trump slipped us another Lucy. For those of you who don't know, that's a metaphor for Charlie Brown when Lucy would hold the football and Charlie Brown would go up and she'd yoink it from him. So anyway, Trump keeps slipping us Lucy's with peace in Hormuz, or sorry, peace in Iran and Hormuz opening and so forth, and then we see more artillery. So
Yeah.
for that
Mm-hmm.
reason, we're focusing on something a little closer to home. And so for a while, we were able to, by we I mean the talking heads and so forth, we were able to jawbone oil down. We have just seen a spike from the 67s up to 74, 72 to 74 it was today. So we're starting to see. I think we may have hit bottom, right? And that there's only so much more jawboning we could do. And this is a great example of why. So why don't you tell us a little bit about your thoughts on that?
Well, in particular, the I've been really bullish on uh, the Canadians for a specific reason. For many reasons, key of which, where they're strategically located, with the Middle East out of the picture, if the U.S. is going to be truly independent with its energy infrastructure, the Canadians are an essential component of that, Alberta in particular, because they have heavy crude.
Right.
Okay. And because we have so many assets in the Middle East, or the United States does, uh, our refineries in the Gulf of Mexico and elsewhere, they're set up for the heavy sour crude types. The only other country that produces that are Canada and Venezuela. Okay.
Hmm.
So we know what's happened with Venezuela recently, right? But that's still a geopolitical question mark.
Right.
That truly hasn't been completely resolved yet. However, we still have great
As
relations
far
with
as I
Canada.
know, it's still just a mess on the table. I mean, granted, I don't have
Yeah,
access to what's going on in those backroom dealings,
yeah,
but you'd think for something for a country who conquered the largest oil reserve in the world, right? You'd think there'd be a little bit more chatter and hullabaloo about it, but I haven't heard anything. So it wouldn't
yeah.
surprise me if that's just laying stillborn on the table. That whole endeavor.
Like with Trump, he's
Yep.
one of these people that goes heavy into something really quick,
Shiny
then
object.
gets distracted. Yeah,
Yep.
and it never really fully completes a sentence, much less
Yeah. Well,
yeah, right,
exactly. Never completes a full sentence, let alone an actual action plan. So with that,
right.
touching on Hormuz, I just mentioned that we're back to skirmishes again. Zach, you mentioned how they're attacking infrastructure and that shipping to China, which by the way, we have to mention that China is no longer sitting this out.
Correct. Yeah, it's interesting when Hormuz they did start to let traffic out. What's interesting about that is to my knowledge, when I tracked this, the only thing the United States really got out of that entire fiasco was 2 VLCCs.
Mhm.
That's it. Uh, you know, so it's like all the rest of those ships went over to Asia.
Yeah.
And so what's essentially happened is, since hostilities have picked back up, and the memorandum of understanding has, it essentially just doesn't exist anymore. The Iranians say it doesn't exist. Trump says it doesn't exist. They're not acting like it ever existed, really. So, for all intents and purposes, it just doesn't exist. So now. There's going to be a limit to this, though, and I'll tell you why in a second. But what's interesting about it is, as soon as Khomeini's funeral. By the way, Khomeini's funeral was interesting because there were over 45 million people that actually attended. That's like historic. We've never had a pope that's died where
No.
that many people have paid the respects, and so like that's a big, big issue. And
Right.
I think that goes to show that we may have. I was thinking about this earlier today. Remember when the Japanese general said, "I'm afraid we've wakened a sleeping giant" with respect to the United States after attacking Pearl Harbor?
Yeah.
We may have done something similar to Iran. They're going to have to rebuild and stuff like that. But I have a feeling geopolitically and strategically, they're probably going to come back a lot
Yep.
stronger and heavier for it. So we may have
Sure,
really
and
made a
well,
big
not only
strategic
that, but the
blunder.
the geopolitical alliances that they're going to form, and
Right,
because
right.
they have a substantial part of the Muslim world on their side. That's the reason why
They
we
do.
had such a huge turnout for
Right.
that, for essentially their version of the Pope, right?
Right, for the Shia Pope,
Yeah,
I guess you could
exactly,
say. Yeah.
exactly. Yeah, to be
So,
specific. Yeah.
uh, right. So the what's interesting about Hormuz now, though, is it now. Okay, so Mushtaba uh, is now the new supreme leader, which is the previous Ayatollah's son.
Hmm.
Okay, he's a tough character, and what's interesting about that guy is now that sort of like all the formalities have been granted and powers have been granted to him, and the MOU is sort of like out of the picture. It's
Hmm.
going to be very interesting to see what happens now. However, it doesn't really matter, because whether Trump knows it or not, the United States is pretty much just out of military options for the most part.
Right.
Like when we have aircraft that they can't fly too deep, all the strikes have been like sort of on the coastline of
Hmm.
Hormuz, because anytime we go to try to go deeper in to Iran, we get planes shot down.
Whoops.
And yeah, so it's we don't really, yeah, exactly. So we just don't have a lot of military options, especially not being able to use the airspace of the other Middle Eastern countries.
Right.
And on top of that, we're down extremely low on munitions. So whether he doesn't recognize it yet, but eventually it's going to be like within a month, it's just going to
Right.
be like the Navy's going to have to leave.
So
So
as per this last side, I think that what you're citing is yet another reason why we should start thinking about a sector rotation coming up or in the midst already. We'll
right.
go over some of our previous picks, but I see you have a lot of like metals and utility, things like that. Obviously, great choices for when you have such a sector rotation, especially when you start to see a recession or even a depression. We don't know how bad this is going to get. So,
Yeah.
these are good things that you want to balance out your portfolio anyway with. If you remember some of my previous rants about what we call risk neutral portfolios, it's a fancy term for saying you want to have a balance, right? So, especially if you have good stocks that are kind of, chugging along, no crazy bubbles or anything, and they have dividends, it's just a good idea. So we like to give a little variety here, especially concerning that impending sector rotation that we mentioned. So let's start with AZZ.
Well, not just that, Danny, but part of what I was looking at too was sort of like risk on, risk off behaviors historically. And
Sure.
I tried to pick companies actually that even during like risk on periods do well in the S&P.
Exactly.
Because
Yeah. Yeah. Uh-huh.
my portfolio generally has been very energy heavy and defensive in nature,
Hmm.
right? So I tend to be like down a little bit on like risk
Happens.
on times,
Yeah.
right?
Happens. Yeah.
Right, risk off, it goes really really high,
Sure,
of
sure.
course,
And
but
again, that's kind of what we're talking about here is you want to have things that'll, they're not going to get slammed. You know what I mean? If there's a real risk on popping bottles kind of, period, they'll just
right,
kind of chug along or at least stay put and then you can rack up your dividends. Right. So,
right,
or you get it at such a low price that even if it is kind of wiggle waggling, which is a technical term, by the way, it'll just kind of you've gotten such a good price that it's okay,
doesn't
if it
matter,
kind of hangs
right,
out. Yeah,
yeah.
exactly. So
Mhm.
we are actually at pretty decent prices right now with AZZ. Retracement to the 618 Fibonacci. Those of you who know me or have been following fairly, for any length of time know that I like the 618 and the point 0.5, those retracements. If you look at the Elliott wave, we may actually be in the midst of a correction, which, if you're not necessarily thrilled about these current prices, we could see something lower. I'm going to sketch that out here. We've already seen this one. We may see something like this. So I
That's
would
what I was right. That's what I was
personally,
expecting, right.
personally, I keep an eye out for 128 and 121. Um,
Yep.
it Okay, with OGE. Okay. So while I'm sketching these technicals, why don't you tell us a little bit about this one? This is another energy stock. It does look
Yeah,
like it
energy
paid
utility,
dividends.
yeah.
Okay,
Hmm.
great, great.
Yep.
Perfect for 3.51% dividend. That's not too shabby. And
Hmm.
we're at a decent price here. It's not the cheapest, but $50 a share isn't going to break the bank. Let's try to get want to try to get the move here. So it looks like this is encapsulating the behavior of the move. I wouldn't be surprised if we see a retracement here. The issue is, we are due for a technical retracement, in my opinion. However, with the sector rotation into things like utilities and energy and so forth, not entirely sure that that's going to happen. Look, if you zoom in here, we have some what we call consolidation near the top here. When you see this knocking on this high, and the momentum indicators aren't the strongest, but you do see it's kind of starting to pick back up. We could be looking into a breakout. So it's really up to you on your risk tolerance on that. I'd be looking out for like a 46.19 for a retracement to the range here. That's perfectly reasonable, even if we are getting ready for a breakout. If we retrace any lower, 43.23, that's a little bit more Hail Mary in my opinion. Just given the nature of where we are geopolitically. Target would be 54.74 right here.
Yeah, I was actually hoping this would drop a little bit in order to
Likewise,
get in.
yeah, yeah. Now that I'm looking at it, I'm like,
Yeah,
I'm
yeah.
always the guy whose dick gets too hard and I jump in. Don't get your dick hard before the panties are off, and the panties aren't off here.
No, I'm real conservative with entry points. I'll put the limit order in at what what I think is reasonable, and
So Matson is a profit
shipping company.
monopoly on shipping. Ooh, I like that. I like that a
And this is a
lot.
Pacific shipper too. So there's literally in the
Oh man, they're
Pacific
cleaning it
fleet.
up.
Uh-huh. And here's the thing. This looks a little too bullish, right? I would
Hmm.
like this to correct down further, but I don't know if it is,
Yeah,
honestly.
that's
Like
that's
that
the thing.
I
Like, I don't even know how to draw these. I don't even know what to do here on
right.
the technicals, right? Because if you notice with my Elliott waves, you have like this, right? You have these zigzag thingies that we call waves, right? I could draw it this way. Maybe if you don't like that, and I can move this around, whatever. Look at this. This is just like whoop. So
Right.
I don't know what to do here, but that could be a very good thing in the sense that we're just seeing a paradigm shift they just hit the jackpot here. I mean, it is every
Well,
dog has his day in the sun, and it could just be that. I'm just looking at the price tag and I'm kind of like, I would
They're
be. Yeah, go ahead.
Here's the thing though, that they're extremely profitable and they got enormous cash flow. So
Yeah. I mean, that'll do it. Like, well, look at this. Look at this long term. This is pretty much this has just always been going up.
uh-huh.
As far as you go, it's just
Up and
yeah.
to the right.
I
Yep.
like meteorically. So I don't know what to say. I would love to be the one to tell you, be conservative. We could see a dip to 190, 44, 175, 30. Put it this way. I would put Hail Mary limit orders there and just say, fuck it. And if I
Buy
miss,
the dip.
buy
Buy
the
the
dip,
dip on
buy
something. Yeah, right.
yeah. So, as much as I'm really liking this, at $200, I'd probably be waiting for that Hail Mary. Um,
Yeah.
oops, NWE, Northwestern Energy. Okay. And they also, let me, before I move on, I just wanted to check out. I do see that they pay a dividend, which is even better.
Mm-hmm.
And that is, come on, where are you? Do do do. Point 0.7, but look at the price, right? So, you can't expect it to be 10% dividend when the stock is like $200, right? That does make sense to
Mm-hmm.
me.
Yeah.
Okay. So Northwestern.
This is the
Okay.
most
All right.
profitable. This is the most profitable utility in the Northwest Pacific United States.
Oh, geez.
So
Okay. Well, say no more. We could just take a look at this most recent breakout to really be bullish. I'm sorry to establish this trend. What we have to do is break this little dragon head here. It looks like we're going to, but it's kind of like steady. Okay, so I would wait for a dip. If you're looking to take profits off of this, the profit would be at this horn here, if you will, which coincides roughly with the Fibonacci extension here at 81.66. So we're looking at
right.
80 to 81.66 being a profit target. I'd look to enter. I think that is perfect. If you see this volatility here, it's perfectly reasonable for this to retrace to 67.89. So if you're thinking about an entry point that's conservative but realistic at the same time, I'm looking at 67.89. All right. Great selection there. I actually like this one. Whoops. Whoops. My dis my
PLPC. Yeah.
my Lisdexia acting up again. Oh my gosh.
Mm-hmm.
Wow. Okay. Uh, say less here. Look at this. It's insane. This is another one where the conservative in me is like, you want to wait for a dip, but I think we got it actually. Let's take a look at this. Let's take a look if we actually got our dip. And look at this, beautiful. I swear to God, guys, I was not planning this. I was not planning for it to look this perfect, but we
I
have.
literally just emailed this to him. I
Yep,
can
he
testify
did.
to
Yep,
that.
yep.
Yeah.
So look at how beautifully these Fibonacci's work, and people say they're BS, they're magic, whatever. Okay, fine, but look at how beautifully this
look
works.
at right.
Yeah, so yeah, I mean, we might have missed the boat here at 317. I would love for us to be in our let's do it this way. I would love for us to be in our corrective Elliott wave here. In other words, I would love to see this. Are we going to see that? I don't know. For me personally, I'd probably be putting limit orders at 340 and 317. Um,
Or here's just for sake of argument. Uh, One share at current price.
yes.
Okay.
Yep.
Then limit order at the lower.
Yeah.
That's
No.
how. Yeah.
Yep. We,
Yeah.
we call that staggering. So,
Yeah.
if you know that this is something you're going to load up on and you just
Right.
want to get in, it's perfectly okay to get that one share at that price. And you know what? If it goes off without you, then you just buy it on dips as it goes up.
That's honestly when I reviewed my account today. That's basically what I did with some of these. Is it's like, oh man, this
I
works. So I just got in, and then put the limit order at the
We're
lower
we're gonna
value.
we're I'm gonna
Yeah.
show you some examples of that with mine when we follow up on some of our other picks. Okay, Terex Corporation.
Mm-hmm.
All right. This is another one. Let's try to get when in doubt, zoom out. Yeah, I mean, something obviously happened here, but we see this very gradual up and to the right motion. This is a month chart, okay? So we're not, let's be real about this. We clearly see some cycles here. Those could be even again, this is a month chart. This goes back to 1974. Wow. So clearly they're not going anywhere. And yeah, if we just zoom in on this most recent little thingy here, at highs.
Well,
Yep, go ahead.
this. I mean, this company. When I was looking into it, they manufacture like materials processing machinery, waste recycling equipment, uh, uh, mobile like elevating work basically like the nuts and bolts for construction companies and so forth.
Oh,
Right?
cool.
They also all the stuff necessary for like electrical utilities to function. So this plays back into the same theme that we were talking about before with the U.S. electric infrastructure and grid needing a major reconstructive surgery. So
Yes,
this one,
that's
I'm particularly long term
so.
very
So
bullish on.
I actually really
Right?
like this for two reasons. Number one, who is the company that made the most money during the gold rush? I know you know this answer.
Levi Strauss.
Levi Strauss, right? Why?
Yep.
Because they provided the utilities clothing to the miners that everybody needed, right? And for those youngins who are listening and they want career advice, I actually built my career off doing stuff like that. So, for example, I work a contract that I have is at a large bank in the fraud department. People ask me, "Oh, what do you look for?" I have no idea because I don't do that. I provide the infrastructure and make sure that all their technology works such so that they can do whatever they do, right? So you want to be that guy that is needed to do the thing, right? So I
Yeah,
love this.
my cousin Justin, he uh, got his like Microsoft certification, and basically he's the sort of guy that for like local businesses will run local servers and stuff like
Yeah,
that, and he
yeah,
has all the IT
sure.
certification to not only do the manual aspect but to do all the security updates and IT stuff for businesses at the same time. He's
So
got all sorts of property in North Carolina and
yeah,
stuff, and
so
he's been successful his entire career.
a lot of
Yeah.
people, and I don't know, maybe this is by design. This is just kind of an aside on career advice for the youngins, from two unks. But
Mm-hmm.
if you society kind of programs you to want to be that entrepreneur, that hedge fund manager, and so forth. And it's like, sure, there are those people exist, and yes, they are very wealthy, but is that going to be you? Right? A
Right.
much more risk averse, but almost entirely guaranteed to win kind of approach is to go the route of your cousin Justin or me, right? Get something for which is that is, I mean, in demand. I would say in demand, but that comes and goes, right? But there are certain things that you're always going to need. I don't care how big a recession is. In fact, I argue that during a recession, you're going to have more fraud, right? So these are things that you have to plan for in terms of your career to get a skill that multiple people can leverage. So you could be that guy who does that thing.
Well,
Anyway.
also just to piggyback on that, I've got a friend who made a lot of money in the advertising arena, but now recently with the AI and auto stuff and them firing a lot of workers,
Mhm.
she's formally trained as an electrician.
Nice.
So it's like
Hey,
no matter what, she can just go back to doing that,
which
and yeah,
that's
perfectly fine.
awesome because that is actually my second piece of advice that I talk to the youngsters about is don't underestimate vocational. Like for some reason, our generation got poisoned into thinking, oh, you need a degree, you need a degree, you need a college degree, and it's like I have to set an appointment for my plumber like weeks in advance, right?
Mm-hmm. Because
So
they're
it's like,
overbooked.
yeah,
Yeah,
yeah, they're overbooked by like a wide margin. He only does it
right.
for me because he's kind of like a longtime friend of the building. So it's like, otherwise everybody else I call just won't even return my calls. So, there's that. So long term on this one, GGB,
Mm-hmm.
we do have that significant retracement, but granted, long term, this is a monthly chart. So we had some issues back in 2006. Who didn't, right?
Mm-hmm.
So now let's look in more recently, and we are kind of chugging along. Nice little dip here. We were at highs. This if I would have said, if we would have covered this last podcast, I would have said the exact same thing I was about all the others. Wait for that, corrective phase. I'm looking at a point 0.6 or a point 0.5, and this is one. You could see that pattern of behaviors in my recommendations. This is exactly why, right? Because had we noticed this last week, these would have been some great entry points. I still think it may kind of have some trouble with the 786 at 459. And then I'm listening to myself. It's going to have trouble with $4.59. Just buy it.
No, I did. I got in. I just got
Yeah,
in. Put the
yeah.
limit order at
I'm
the bottom. I'm
I'm
like,
sitting here going into risk man, and I'm like, fuck it.
yeah, right. Yeah.
uh,
This is by the way, this is the 33rd largest steel producer in the United States.
okay.
And if I'm not mistaken, I believe they do electrical steel too, which has to have a certain magnetism and weighting and stuff too. So,
All right.
yeah. And we're talking 33rd biggest, I believe, globally.
Yeah.
So it's not like necessarily like a small, hole in the wall
Sure. Exactly.
market. Right.
Like some dude out of his garage.
Right. Nothing
Uh,
wrong with that though.
Nothing wrong with that, but and actually,
Not
that
not want to be on the New York Stock Exchange though. That's
yeah.
that's true.
Whoops. Hey, get back here. All right. You ever
Largest
have that?
liquid. Oh, this is the Cax is the largest liquid cargo barge operator in the United States.
Oh, I thought we covered them.
I don't think so.
No,
We
no,
did
I guess
we
not.
did NAT, and I did get on
NAT. That's right. That's right.
Yeah.
I'm confusing.
Dude, I'm super bullish on NAT too. Yeah, I had limit orders at lower values, but I got in at
Sure.
a pretty good price with NAT. So
Um.
that'll definitely,
Yep. Hitting up.
especially for the United States with its own requiring its own energy and transport infrastructure. Companies like this are going to be super, super important for the materials economy moving forward, right?
Right.
With globalism breaking apart over time, I mean, these companies like this are going to be like super just essential, honestly. Just
Absolutely. So I would love to see this. A retracement to 618 or point 0.5.
Yeah.
Again, it's really your call as if you think we're actually going to get that. 129 would be good to buy a share or two, and maybe as Zach mentioned,
Yeah. Put in a lower
stack. Yeah,
order. Yeah.
yeah, for sure. Okay. And to review, we had AA. Is that American Airlines?
No, no, no.
Oh, Alcoa. Yeah. I've been following this for a long time, long time.
Another steel manufacturer, steel producer. If I'm
Yeah, Alcoa
mistaken.
was one that my trading algorithms liked for some reason, and I think it's because and you might want to fact check me on this. It had a fairly large beta, so it would do characteristic things and move a decent amount so that the algo could like make money off of it, basically.
Mm-hmm.
Great price here if you're looking to pick this one up. We had a solid drop off. I again based on the geopolitical and economic kind of situation that we're thinking about, I cannot see this lasting. All of these type of companies you're going to see, and Alco has been around forever. It's
Right. Not
I
just
was
that, but
trying to remember
these
some facts about it. I just can't. But
from what I remember, this price drop. That's kind of why I wanted to pick this out today, specifically
absolutely,
because of this price drop.
yeah,
I honestly,
absolutely,
but I believe right now, at least, I view this as undervalued. To be honest, when I look at
I
their
would say
cash
so.
flow and their profitability.
Well,
But here's what's interesting is this drop down here. It was like a confluence of different things. Primarily, it seemed to be the market sort of punishing them for buying up smaller competitors at a cost of like 4 billion total
hmm,
or something like that. But they've had a string of them since this drop.
interesting.
So
And
they're
out.
they're 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 purchasing competitors that are that are smaller, and the market I guess just didn't like the what they acquired. I'm
Point
not sure.
point 0.8% dividend, but again, it's a little bit pricier stock. I mean, it's not super pricey in the 46s. But consider what we dropped from 83. That's like half, right? So if
Right.
you're, I I would strongly consider just doing a market order at these levels, or if you can, just if we wiggle waggle around here,
Just to
for
save. Yeah.
yeah, 46.30 just to be safe, just so I
Yeah.
don't lead anybody wrong. AGX, that's not an A. Okay. Wow, look at this. Holy crud. Wow. Okay. Um, the stocks like these, I wish they would just split, right? Because it's like $800. Like I get
Hmm.
it. I understand. It's just like sticker shock. You know what I mean?
Hmm. Yep.
Looking at the day chart, zooming in, it looks like we did get like considering the up and to the rightness of this. We got to have like a catchphrase for that, but the up and to the rightness for now of this. It looks like this retracement to 786 is probably all we're going to get to $661, a whopping $661. We could see this nice little drop to 144. It does pay a dividend at 0.27%, which actually isn't too shabby considering the price of the stock.
Hmm. Yeah.
LDQA. Have we looked at this before? LDQ, LD. Oh, Lizdexia again.
LQD.
I swear to God, man, my Lizdexia. Okay. Righty. Wow. Look at this growth. Just in 2026 alone, we have almost tripled, right? So this is non-trivial here. There's got to be a reason for that. Um, Looking at the Fibonacci's, again, I just wish some of these were at better prices, but it's good to set up, right? So, we did see a tiny retracement to the 886. That's usually nothing to sneeze. It's usually nothing to really write home about. But considering this up and to the rightness, it's something to think about. Buying at these
Now,
levels and placing limit
this
orders
is
here and here. Yep.
part of what we're seeing here overall is okay. So when did this really start to take off? Because this will serve as like an example.
Let's see. It looks like. I mean, it never really didn't,
Well,
except
no.
ignoring this,
Yeah.
ignoring
Right. Right.
2019. So let's see. Okay, let's look at the hyperbolic growth. I would say it
Right.
probably started right here,
Yeah.
in
Hmm.
July of 2025, right? And then
Right.
like the meteorically hyperbolic growth. Look at this spike right here. This damn it, we called these giant green dildos.
Yeah.
Uh,
Sticks.
yeah, yeah,
Sticks.
giant
Yep.
green. But anyway, so this guy, you'll see where over here at that was May of 2026. Well, that makes sense.
Right. Now, the reason why I say that is I date this sector rotation having started at the beginning summer like July August of last year.
Mhm.
That's when we started to see this bleed into the material components. I think, don't get me wrong, I think the idea was Trump's gonna come into office and he's going to
I
reinvest
see.
in
Yeah.
America. You see what I'm saying? That's
Right,
what I'm
right.
thinking that like the big money is doing here.
Yeah,
Is they're
yeah.
saying Trump wants to reinvest in like America structurally. So that explains that the date of this bullish move.
Yep.
Right.
So this one is flex steel. Again, we're looking at other things in the steel industry here. This was a little bit volatile, kind of hard to draw the Fibonacci's around. I'm gonna anchor it here just to see. Uh, okay, we have some
Yeah,
agreement
this
there.
I think this is gonna drop personally. This is gonna go down
Yeah,
again. Yeah.
yeah. So, okay, I have it a little bit better here if we use this tip as the upper anchor. But yeah, we could see a drop pretty precipitously, which again doesn't mean it's a bad thing going down to the 618 or if we're even more greedy to 44.97. So I would strongly avoid buying at this top here at 76.62 because this looks very toppy
Hmm.
to me.
Yeah.
And yeah, we could expect that sell off. So 52.44 and 44.97 would be what I'm looking at.
Yeah,
And
I got 45. Yeah, 40, 45. Yeah.
Good, good, perfect. This is another one up and to the right, and at extremes of highs, very high chance that this will retrace just technically. So again, I'd avoid buying here, aping it at 46.97. I'd be looking at least a drop down. You know, any of these prices are reasonable. We could see something as low as 32.43. But I'd be stacking orders here 40.75, 35.86, and 32.43. I think that that's the way to go on this one. Just too high of a chance of a technical retracement.
Yeah. Yeah.
Just to go back to our golden children, we have let's zoom in here on Petro Brazil, favorite of the show. We did, as you see, the advice still stands. I like this company, and you can see I'm very honest about what I pick and where I picked it at. And we have these red horizontal red lines are where I added to positions, right? So we finally are starting to see this uptick. I think that we're going to break through. I'm going to be solidly in the green here, but it's going to take some time. CRG Crescent, that's another favorite of the show. Again, you see a bunch of red lines as I'm purchasing all the way down, and will continue to
Hmm.
do so because I suspect that this is going to hit pretty hard and pretty soon.
Well,
CNQ.
no, no, no.
Yep.
Look, I think it was Petro, it was NMR, Petrobus, and Crescent. I think we came to the conclusion that those are going to be like the the late bloomers. Those are going to be
Yeah, yeah, yeah,
pushed
yeah,
off into yeah,
exactly.
yeah, yeah.
And
And
that's I
those are
kind
going to
of
take a lot.
glossed
Those are
over
going to
that,
take
but
time.
yeah,
Yeah, yeah,
yeah.
yeah.
But yeah, so CVE I believe was one. Seeing a nice little pivot here. So I think the point is, if you look across our portfolio, sure, there were some that were underwater, whatever. No problems there. The issue is we could start to see that coming around, and I don't necessarily think that that's, especially these conflicts aren't going to end tomorrow. So we're going to see this sustained kind of gradual growth. And then I think things are really going to hit the fan once institutional investors clamor in. We already see, this pivot from 67 to 74, or what is that, 76 was it? Yeah, 76. That's not trivial. Okay, so I think that we're going to start to see that, even though we have retraced, we're going to start to see that continue that way.
Yeah, and overall with the I've been kind of honestly with the dividends between like the Canadian producers and some of these
Mhm.
the smaller oil companies that will be like we're talking these companies are going to be like absolutely essential for like a civilized society
Yep,
to exist within the
exactly.
United
Yep.
States, right? So like long term with these prices, especially now that oil, has dropped as precipitously as it has,
Hmm.
and we're still, oddly enough, interestingly enough, we're still seeing some buying pressure. They haven't crashed to their
Sure.
previous lows or
Never
anything.
never recovered previous lows, right? Or
Exactly.
previous levels
So
even. Yeah.
previous levels, right? So the reason why I'm still like really bullish on those two is I mean, God, man, like NMR, the dividend's like 14%.
Yeah.
Like, geez,
Yeah.
that sucker pops again, and just that's incredible.
Yeah.
Like,
Yeah.
and that it's at such a low level where even if you don't have a lot of money, you can accumulate that sucker, and like 30 years from now,
Sure.
it's really really good. I mean, buying when I found some of these and we've talked about them, like the more and more I'm just like, man, I'm so glad that we looked into
Yeah.
that,
Yeah.
and that
Exactly.
it's in the portfolio. So yeah,
Awesome. Well, that's about all for tonight, ladies and gentlemen. Thank you for tuning in. We'll see you next week.
bye bye.
Bye bye.